Right, welcome to the Investor Talk Show, brought to you by REI, and where we unpack real-world strategies, insights, and opportunities shaping South Africa's property market. And today we're zeroing in on one of the hottest trends in real estate right now, the short-term rental boom. Cape Town's short-term rental market is definitely surging, with peak occupancy rates around 70%, and investors are seeing strong yields from well-managed properties. And joining me today is someone who's been at the forefront of this space. It's Nick Taylor, is the Managing Director of Knox Cape Town, one of the country's leading short-term rental management companies, with a portfolio exceeding 2.5 billion. And Nick and his team have mastered the balance between lifestyle and return using data, technology, and hospitality expertise to deliver consistent results for investors. Nick, it's great to have you with us today.
Neil, thanks so much for having me, and good afternoon to your listeners.
Wonderful. So, Nick, let's unpack the market. We've seen Cape Town's short-term rental market has certainly exploded, and obviously with the season coming up now, and we've had average peak occupancies hovering around 70%. I mean, what is driving this surge in demand right now?
Neil, look, I think there's a couple of things that is driving this surge. I wouldn't really say it's a surge. I think, the last 2 or 3 years have been pretty strong. We saw a very strong post-COVID bounce, and the market seems to have maintained these kind of occupancy levels. And I suppose the main drivers of that is that it's almost become quite structural. There's hybrid travel, there's digital nomads, and there's almost a little bit more of a sustained year-round demand. We've certainly seen the winter period almost becoming as strong as our shoulder period. So July and August this year was very encouragingly, not only for Knox, but for the entire market, a very strong winter period, mainly driven by the UAE and the Middle Eastern markets, who are escaping the heat that is obviously happens over there that time of the year. So they came through. South African Tourism has been doing an excellent awareness campaign in those sort of source markets, have identified those source markets as for South Africa to be a great tourism destination, and obviously laid in with various accolades that the city continues to receive, specifically in Cape Town. And most recently we've had the Telegraph in the UK and the Time Out magazine both awarding Cape Town as the best city in the world. So these kind of accolades, even though it's not direct marketing, there is certainly a catalyst for interest in the destination. And I think Cape Town specifically, and I suppose most other parts of South Africa, are very Instagram friendly. So, visitors come here and they are naturally marketing our destination, and that can only assist with the demand for it. But I think that's all helped for short-term rentals to become a core part of South Africa's accommodation industry.
No, it's wonderful to see the short-term rental market just become a permanent part of the investment landscape. So let's talk a little bit about sort of pricing strategy. I mean, you've said before that correct pricing maximizes occupancy, nightly rates, and long-term returns. I mean, what does smart pricing actually look like in practice?
It comes down to data science ultimately, and data management. There are some incredibly powerful tools available in the market. Obviously, Airbnb has their own built-in tool. There is other technology and software available for more sort of professional managers to be able to access market data across a specific region or a radius or in which they operate, and they're able to get a pretty decent idea of the demand for certain dates 365 days into the future. So it's an economics 101 kind of study, Neil. It's supply, demand, and price. And ultimately, when demand starts outstripping supply, the price will naturally go up. And when there is weaker demand and the supply is relatively stable, the pricing will come down to try and attract that business. So The important aspect of this is to make sure that you're repricing every day, which is what we do. The pricing is adjusted depending on not only the occupancy within our portfolio that we manage, but across the entire market in which we operate. And then we're able to see various other metrics such as pickup and pacing in the market. And we're able to see certain key dates in the future and be able to see how much the market is pacing compared to this time last year. So we have a very good leading indicator of for about the next 90 days about how strong the market is or how weak it is. And obviously from there, we're able to either automatically adjust pricing or manually adjust pricing depending on the policies that we've implemented at the property level.
Okay, so let's just talk a little bit about sort of the revenue management in action. I mean, you've mentioned dynamic pricing, data revenue models are becoming standard, and you seem to have got that measure. And can you maybe just share, a little bit more how it works across your portfolio, maybe with an example? I mean, what are the key metrics, the KPIs, and, that obviously ensure the optimal yields and revenue sort of returns?
Absolutely, Neil. In our experience, we found that static pricing leaves around 20 to 30% of an annual revenue on the table. You miss those reservations, you miss those inquiries, you might be outpriced against your competitor set by 10 to 15%, and you're not going to get the reservation. So, whilst it's great to hear that your neighbor down the road has got a certain amount for their home might not be equivalent to your home. So actually understanding the fundamentals of each property we manage is key. And once we understand what kind of a guest we're looking to attract into that property, it might just be a short stay guest who's here on a quick business trip for a night or two in the sort of central business district, or it might be an expat family who's coming out for their annual holiday to a large Camps Bay villa. The pricing strategy is incredibly different. So in terms of the sort of metrics that we use something called RevPAR, which is a well-known hotel term, stands for revenue per available room. In our industry, it's also slightly morphed into RevPAL, which is revenue per available listing. And that is a hybrid of the rate achieved and the amount of occupancy through a specific property. We can get into a long discussion about that, but it's probably the most critical metric for us to use to see to balance the occupancy and pricing policies. And then obviously, in terms of what else we use, we've tracked data rigorously, and we have seen that where we've implemented dynamic pricing approach, some of our owners are a little bit reluctant at first, but once we demonstrate the value of it, we have seen increases of sort of 30 to 40% on a property, and some of our larger properties that can be a good $500,000 to R1 million worth of additional income in the following year. So it is incredibly important to get that balance right. The benefit of it is that you're actually able to set in a lower range, a base rate, and an upper range, and let the prices fluctuate within those parameters. Because obviously you don't want to risk the property being rented out for too low a price, and you perhaps attract the wrong kind of crowd. You don't want to be attracting bachelors' parties and that type of thing. And equally on the other side, you don't want the rate to run too high when the market's running at 80 or 90%, and you end up overselling the property and under delivering on the expectations of what the guests are actually experiencing. So it's very important to understand your parameters in your pricing model, and to make sure that the rates are contained a little bit within the dynamic pricing rules.
Okay, excellent. So let's talk a little bit about power of professional management, I think, because that's very important. I mean, many investors still try to self-manage their Airbnbs. And I mean, you said hiring short-term rental experts protects both cash flow and guest experience. Maybe just share why is this so critical? And maybe you can share some of the big operational mistakes you see private hosts or small managers end up eroding profit because they could disappear very quickly.
I've seen it many times, Neil. Look, the reality, and I speak for Cape Town, this is where we operate, but the reality is that, and media obviously talks a lot about the amount of Airbnbs that are available in the short-term market, which obviously impacts various other housing discussions and the long-term rental market. But the reality is that the majority of operators in the market are what we call part-time or occasional hosts. So um, I believe that they're in the region of 25,000 short-term rental properties listed on Airbnb in Cape Town, of
Mm-hmm.
which only 5,000, approximately 5,000, are available for more than 180 nights of the year. So the fact of the matter is that the majority of operators that rent their properties out are probably residents in their properties. They're going overseas for a few weeks or a few months. They're going to go see families, and then they flip their properties into a short-term rental market while they're not physically staying in their properties. And I think what everybody learns is that if you want to take short-term rentals seriously, it's not a side hustle. It's an operations business. You got to make sure that you've got your proper structures in place, and ultimately it's modeled on a hotel model. There's got to be a housekeeping function. It's got to be a reactive and responsive maintenance function. There's got to be a guest services and hospitality function. So a lot of those factors, an occasional host or a private host that's doing it themselves might not have had any experience in, or might just not know how to handle that volume. So it's actually critical that in terms of a professional management approach, you're recruiting for the right skill set, you're attracting the right kind of people in those roles so that they can deliver on whatever your sort of brand promises, not only to your guests, but to the owners' properties that you look after. So I think the common mistakes ultimately are in being unable to provide a 24/7 sort of coverage. It's a hospitality business. It's not a long-term lease. You don't hand the keys over and collect the rent every month. You're on duty 24/7. You've got to allow and account for that. You've got to make sure that there's maintenance SLAs in place with various contractors and suppliers. And you've got to make sure that your guest communication is quick and on point. And there are various tools these days, especially with AI and offshoring back office guest communication to other time zones has been used. But if you're not responding to a guest within a couple of minutes, they're probably not going to book with you again. So it's an all hands on deck type of business.
Absolutely. So let's talk about the PropTech edge. I mean, you touched on it. I mean, Knox has embraced PropTech. I mean, using platforms like Boom and the AI-powered short-term rental tools. So how is technology changing the way you manage performance and maintenance?
It's allowing us to focus on what really counts instead of just doing repetitive admin, which we can perhaps allow for in terms of building out databases and models which are able to respond to guests quickly. For example, even pre-guest arrival, a guest may be looking at one of our listings online and ask a question about how many stairs there are from the bungalow down to the beach, and we obviously built that into our listing information, and our AI model would reply to that because we built that information into the back end, and it will reply to that guest within a minute. And once a guest gets that answer and they're sitting in the USA and it's 3 o'clock in the afternoon there and they get an answer within a minute, the likelihood of them booking is a lot quicker than them waiting for 6 or 7 hours to get a response. So technology is absolutely critical. It has helped us to kind of lead into that 24/7 expectation of running a hospitality business. And I think it just gets us to be a little bit more precise with how we're delivering our services to our property owners and our guests. And certainly, I think, we've probably experienced about 30% less administration or recurring and repetitive administration in our organization. We manage around about 8,500 reservations annually. So, and a lot of that is repetitive requests and like coordinating arrival activity and what time the guests are arriving, and just trying to cue all that into a decent workflow is really, really important for us. And ultimately, in this business, you live and die on your reviews. And if you can deliver better service, you're going to get better reviews, which is going to assist you with higher ranking on various online platforms and more revenue for our owners. So for us, I believe prop tech has assisted us to get a better review score. We have certainly seen our review scores going up over the last 8 year to 18 months since we've gone deeper into using prop tech efficiently, and obviously that contributes to a better revenue conversion.
Excellent. So let's delve in a little bit more to the hot topic of regulation and obviously risk management. I mean, we know there's growing talk of new Airbnb and short-term rental regulations from the Department of Tourism. In fact, Knox has been a founder of STR, the short-term association. You can maybe just touch on that too. So we had a long discussion there, but maybe let's just unpack a little bit more for our audience who don't know how might these impact investors and managers going forward.
Yes, Neil, I've been a founding board member of SASTRA for a little bit over a year now. SASTRA is the South African Short-Term Rentals Association, and we have 5 directors on that board. And effectively, that has empowered the industry to be able to talk to policymakers and local and national governments and various other tourism associations. So it's been incredible to be in those conversations with the people that are making the decisions on our industry over the course of the last year. Certainly, the Tourism Amendment Bill, which has been proposed through the white paper and is due to be released by the end of April next year, does allow for thresholds and registrations. It seems that what we're seeing is that national government will be leaving a fair amount of the adjudication and power to local municipalities and local governments. We have recently seen in the Quadakuza municipality, which is the Belito area, where they've imposed some very, very intense regulations and blitzes on short-term rental operators up there, with some quite serious legal matters are being undertaken and underplay in that market. Certainly, as you will know, here in Cape Town, the city of Cape Town is far more open to tourism and far more open to trying to find a balance between the tourism economy and the value that it brings to the city, along with the housing shortages and the demand for accommodation, long-term accommodation in Cape Town, with the I think 100,000 families that are moving to Cape Town annually. So it's a fine balancing act. We believe that the city of Cape Town, and they have allowed for it in their latest budget, will be implementing a tariff on short-term rentals. And per their budget, that is going to be levied at a commercial tariff rate. And that will only be applied to properties which are used for more than 40% of the year, and where more than 40% of the property is being used for short-term letting. So as SASTRA, we're busy working with the City of Cape Town on various registration requirements and working alongside them and making sure that the short-term rental industry complies with certainly the City of Cape Town. And we hope that that will be a blueprint and a model which will be applied across the rest of the country, because at the moment it does seem as though it's a little bit disjointed. There doesn't seem to be cohesion between local municipalities and national governments kind of requirements, and it certainly does seem as though the regulations are going to be left to local municipalities, which we're very supportive of. Obviously, the danger of an additional tariff, and the commercial tariffs are approximately 2 times the residential tariffs, are that will layer in a tax in the region of about 10,000 Rand per million Rands worth of property. So on a 5 million Rand property, it's going to add another 50,000 Rands worth of cost annually to the short-term rental, if they're doing short-term rentals once they've registered with the City of Cape Town. And that could throw the yields and the sort of economic equation a little bit up in the air. So every host or every property owner is going to have to run those numbers themselves to see whether that might take them out of the market, and whether a long-term strategy might prove to be a little bit more lucrative. But we anticipate that this will come in towards the middle of next year. But we're supportive of this. We believe that a registration system is well overdue, and that Professionalization the short-term rental industry will naturally professionalize if it's implemented smartly.
Excellent. So thanks for clarifying that. And also we saw that at SASTRA, there was quite a robust discussion around the sectional title and communities. There was a little bit of tension around that. So just unpacking that, the sectional title schemes, we actually heard at SASTRA, they got a bit of mixed feelings about short-term letting. How should owners navigate the rules, body corporates, and community expectations?
Yeah, it's important, and I think the SASTRA obviously hosted a scale conference a little bit earlier this year, and this was a robust discussion during the 2 days of that conference, and I think it was fascinating because the short-term rental industry doesn't want to fight regulation. They want to help to shape it. And I think, obviously operators that work in the industry are able to give some experience shares and kind of implement and suggest models which might work within a hybrid building that might do a little bit of short-term letting, might have some owners residents, might do some long-term leasing. And I think ultimately the bottom line is to respect the building and respect the neighbors, and the short-term rental strategy can coexist. I think it's important that there is proactive communication with body corporates, and there's transparency, that the guests are vetted, that there's some kind of a registration system at the front desk or through the security system, and that there is noise and various technology that monitors noise and any kind of other issues that might impact fellow residents, and that there's visible professionalism. I think that bodies corporate need to be very careful about who they select to manage in their building. They should make sure that either the rental operators or property management companies are well vetted, that they're sticking to their mandates, and that they can coexist alongside the rest of their section owners.
Okay, excellent. So finally, I think, Nick, let's look at the future and the sort of investor outlook of the short-term rental market to 2026 and beyond. I mean, what's your outlook for Cape Town's short-term rental market? Where do you see the next sort of hotspots emerging?
Yeah, Neil, look, I think Cape Town is fast becoming Africa's benchmark for the short-term rental market, and we're very proud to work here. And I think if we can implement norms and standards and elements of professionalization, there might be an opportunity for us to sit at the same table as the major hotel groups, and to ensure that we collaborate, and we're a supportive accommodation segment, not necessarily a direct competitor to the hotels. I think people that are looking for a short-term rental are looking for a completely different experience to what they are looking for in a hotel. And by its very nature and definition, the services are very different. And I think for now, in terms of 2026 and ahead, we're in a phase of consolidation and professionalization. And organizations like SASTRA and I think certainly this registration system that the City of Cape Town is proposing will assist with that. And I think obviously there's various hotspots, and in Cape Town, that is the Atlantic Seaboard, it's the urban fringe, it's the different times of the year are in demand at different seasonality periods. Noordhoek, the Southern Peninsula, is also becoming very attractive for longer stays. Certainly your second and third time visitors, we are starting to see repeat visitors coming into Cape Town. They might have stayed in Clifton or Camps Bay and realized that congestion is a bit of a story over December, January, and they might want a little bit more peace and tranquility, and they're looking for something a little bit more out of your sort of urban zone. So I think the whole of Cape Town can really benefit from this short-term rental demand. And I think in terms of investor sweet spot, certainly the demand levels are within your sort of 2 and 3 bed segment. Those tend to run your highest occupancies, and definitely along the Atlantic Seaboard and in your CBD. And I would say that the decent yields are sort of between 10 and 12, if not up to 15% on the right kind of property that is located well. And then I think the investor sort of attractiveness is that Cape Town still offers a great lifestyle asset ownership proposition. We have a number of our owners in our portfolio who live overseas, who come out and use their properties for 2 to 3 months of the year, and they escape the winters in the north. And that's where we come in as a management company. Is that the Cape Town will be an attractive destination to visit, no matter if you are just here for a few weeks on a temporary stay, or if you're actually investing in the city. And I think a lot of home ownership is being sold to foreign investors who are starting to realize that it's actually a great place to live for an extended period of time.
Nick, that's some really powerful insights there for investors and hosts. I mean, navigating the South Africa's, and it is the booming short-term rental market, I think I could say. Nick, thanks for joining us. If you'd like to learn more about Knox Cape Town, explore how professional short-term rental management can boost your returns, check out knoxrentals.com. Follow the updates on REI. They're also on the social media platforms. And for more conversations like this, you just go to rei.co.za or just watch our Investor Talk Show episodes. Subscribe. Until next time, along with Nick Taylor, who's the CEO of Knox Cape Town. Great chatting to you again, Nick. I'm Neil Peterson, and this is the Investor Talk Show, where knowledge meets opportunity. See you next time.